What's happening, guys? And welcome back to another Sunday Scan. This week, we have Judah with us to go over a bunch of market thoughts, talk about what's been happening, what we're watching for the upcoming week. So, Judah, thanks for joining me.
Yeah, thanks for having me again on, Chris.
Yeah, absolutely. So, we have a lot of great stuff for you all tonight. So, let's get right into it. Crazy week in the market. We've really started to see volatility make a comeback, and that's been quite different than the last 6 months. And so you have SPY starting to pull back. And whenever I see an index move, I really like to think about like what are the key components or what is contributing the most to a drawdown or a pullback in the market, because that way I can look at those variables for a possible reversal or try to get a good read on it. And so a few things that we're really seeing with SPY and with the market in general are, one, you have a lot of war headlines. So you have the conflict headlines in the Middle East, and that's really that's taken the VIX or the expected volatility and that's raised it. And so we've gone from an environment where we had a very low VIX or very low expected volatility to one where any headline can set things off. And so instead of VIX spiking and then coming back down, it's spiking and it's staying there. And that basically juices up all of the put and the call premiums. It makes things more expensive, and you just get into a different kind of market dynamic, much closer to a bear market dynamic. Not saying that we're anywhere near a bear market. This is just a slight correction, but that's how it trades. You have raised volatility, you have sharp moves, and it's just much different than a low volatility kind of bull market, trending market. So it's just something to be aware of, that's kind of where we're at right now. So you have the headline risk, you have an elevated VIX, and then a couple of other things that are contributing to it is earnings season. You've really noticed that not many things are having a positive reaction to earnings. There's a couple, but a lot of times when you're in a market where even if something has decent earnings and it's selling off, it's because people are saying that this might be the best thing that's going to happen to this company for the next couple of weeks or even a couple of months. And so I want to take that liquidity. And you really saw that with things like the AI names, at least so far. Not all of them have reported, but you had things like ASML report and they went down. And then you had like TSM or Taiwan Semiconductor report and they went down. And so, as you have these key sectors that are moving the market, as they're selling off on even decent news and they're taking the other names down with it, that's something that I pay attention to in order to see, are we going to keep trending down for a little while, or is this like a short-term blip? So yeah, high volatility environment. You have the AI sector getting hit. I mean, we've had some really wild moves come in that space on the downside. And then another thing that I'm watching was the financials. We talked about XLF last week, how that financial index is a major component of SPX and SPY. And the same story, after earnings, you had things like JP Morgan, they got hit on the downside and they recovered a little bit, but not back up to the highs by any means. And so, I just try to look at what are the key variables that are taking this market down, and then I can watch those for when they start to reverse. And so if we start to get better headlines out of the Middle East, if you have financials starting to bounce or to trend back up, and then if you have some positive news in the AI space and you have things like NVIDIA start to make a comeback, then I would expect the market to follow, or if a new sector kind of emerges and acts as the leader. But for right now, I think that we're in kind of correction territory. The market's down 5% or so, and I think that we will be choppy for maybe another week or two unless there is some news. And then kind of the final thing that is on my radar for the general market direction is bond yields. And we talked about this over the last month, how the Fed really had a very dovish or easygoing tone, even when you started to see some of that inflation data tick back up. But it got to the point where inflation data kept getting worse, and then they had to kind of change their tune. And so you even had Powell say that inflation is not making the progress that we thought that it would. And so we might have to not cut rates this year. And so you had bond yields shoot back up, and that adds pressure to the market. So you just have a couple of key variables that are really pulling things down in the market at the moment. And it's not until I start to see those reverse that I'll start to get a different view. So Judah, you've been trading this market. You're mostly a long bias trader, but could you share your market thoughts? And then later on, I'm sure that we'll get into, what are some good strategies that mostly long bias traders can do during volatile times?
Yeah, so I definitely agree with you. We're in a correction now. This is probably the biggest pull that we've had since this October pull here. I mean, down here was about 6%, and over here we're almost nearing that 6% mark as well. And yeah, I mean, six sell-off days in a row. We have decent, either average or above average volume in the selling here, and these leaders here, the AI names and semiconductor names, are following those nasty sell-offs and pulls. And I think that it's just something to keep in mind that although we've pulled back a lot, the volume is decent. We've had a decent move into this pullback, and we may get a rally next week. And even with that, like, we may just continue to go into chop. So it's very hard to predict what we'll do from here. Although I do think we see some relief next week. I also would be cautious to be extremely bullish, because at the end of the day, you never know if this is just going to bounce and then continue selling off. So between the SPY, the QQQs, even the NASDAQ here, I mean, we've had some decent pulls on it. And for somebody like me who is more on the long side, this is an opportunity to either stay out of the market and just keep eyes on things and prepare for what's to come in the future, or there's these these bear ETFs and short reversal ETFs that have been pushing out of the bottoms here. Like, we have the SQQQ here, which was breaking out of this bottom. You have the inverse Bitcoin name that as well breaking out of the bottom. Tesla over here, as Tesla was kind of breaking down this area into the lows, TSLQ was kind of breaking out of this tight range here and was pushing higher. NVDS and NVDQ are breaking out, while this NVDA is nasty breakdown today. And then we have the semiconductor bear ETF, which we had on radar and was mentioned a few times last week, as it was like breaking out of this 34, 70, 35 area. And with all these semiconductors breaking down, this could be an opportunity to trade on the long side. So in markets like this, if you don't short, there's either the puts that you could go with that just limit your risk, and there's also these bear ETFs that you could try and trade. There's also, however, like, there was names that broke out with the war. We had the Israeli drone names that gave some opportunity back last week, and PRZO, HUBC were two of them, as well as the oil and gas name, which provided monster moves last week. We had INDO and HUSA being the main two, as well as TPET. So it's really just about, like, either finding themes and sectors that hold up and show relative strength, or taking those bear ETFs on the opposite side, or you could just sit out of the market as a whole. We also had the ACB and CGC relative strength last week as well, which came out of this range and pushed higher. And on top of that, there are still those T+2 setups, and there's still intraday setups on small caps and things with news, like, as the days come by. So it may be a little more difficult now to predict what will happen tomorrow, and watch lists do get harder to create as we come into these times. But as the day go by, like, you realize that there could be a few setups there, but many people are strict in this sense, where they'll just stay out of the market as a whole. Like, when they see these moving averages turn and the 10 ends up below the 20 and they're sloping downwards, they'd rather just wait for things to set up. And that's another strategy as well. I mean, this was a great run. I'm sure a lot of people made some great profits here, where they don't mind sitting out a little bit instead of giving it all back. And there's another thing, which is some mean reversion opportunity. If ARM gaps down another day, and potentially bounces off this 80 level, that's another way you could get long in times like this. Nvidia, if it drops back down and fills this gap here, like, there's different ways of playing the market. But it's up to you whether you want to sit out or continue, trying. But my thoughts, I mean, we'll see what happens. I do think we get some bounce some point next week, early next week, as we have this nasty sell off.
Yeah, those are great thoughts, Judah, and I totally agree. And I think that whether someone's long biased or short bias, whenever there's a change in the market and you get into a new situation where you might not have go-to strategies yet, I would just recommend that people really just slow down and just to recognize that you don't have to be pedal to the metal every single week or every single month, and it's okay to just take it one trade at a time. Look for setups that are working in that current market, identify the trend, identify the key variables, and then just try to find a few ways to play that. But you don't have to swing for the fences during all periods. So I know that for myself in the past, I've had drawdowns because I've tried to really push it when I should have been taking a step back and really just calibrating to the market and looking for strategies. So those are great thoughts that you had, Judah, and the inverse ETFs. Especially the levered ones, those can be great for intraday trades. And that's really been a new market development over the last couple of years because those haven't always been around. So that's a really good opportunity or resource to use. So getting into some of the trade recaps for this week, something that Stan and I talked about a lot last week on last Sunday Scan was waiting for this CVNA trade to really develop and to play out. And so we were watching that 73 level or so, and we talked about how that was kind of a key sentiment shift area for the stock. And over the last couple of months, it's been holding that pretty well, but it finally broke. And we talked about letting it flush under, kind of letting it retest and prove that it wants to reject and that there's actually sellers there. And so I was able to get off a good trade with puts on that during, I think it was a 7% downtrending day, but it wouldn't have happened if the market wasn't weak and if there wasn't something to really break it free from that level. Because again, we've talked about how some of these stocks, they're up a lot, but as long as conditions are good, it helps them to stay up. It supports them. And then when you have the market start to pull back or those support systems pulled away, that's when a level that has been on watch for a while, that's when it can finally be free to break down. So that was some really nice timing with that, and props to Stan for being on the same page, and we both had great trades on that. So that was a good one. And then another kind of trade recap for the week, even though I didn't take this trade, but we've been talking about Tesla for a while on these scans and how it's a very rate sensitive name. And so as bond yields come up, as the economy slows a little bit, they're having demand issues. Things are more expensive for them. And the company is really just going through an adjustment period. And it's not uncommon for this to happen. You have this with things like Meta. You've had this with Apple before. And so a lot of these large names, they go through these adjustment periods where they have to refine the business. They have to focus on what is working and cut out certain areas. So they did some layoffs. And I think that there's still going to be some pain for Tesla, especially if the market is weak. So that first target of 150, that was met, and we're a little bit under that now. And we'll see. If the market stays choppy and this does not have any good news come out, then this could fall to 130, 125. I would not be surprised by that. But I think a lot of it from here is going to be pretty market dependent. And so I'll be looking at what are the key variables in the market to really get a read on some of those other names. And so those are really the only trade recaps I have for the week. And we will get into the next section now. So t-shirt winners. We had some great comments in the comment section, and I encourage everyone to leave a key takeaway or to leave a question, and we will answer it on Sunday Scan. And again, we want to provide as much value as we can. So if you have any questions about trading styles, markets, strategies, trade recaps, just anything that we talked about, feel free to ask those in the comment section. And so the t-shirt winners for this week are Jonas, or some version of Jonas 52, and Velkrosky. Congratulations, you have both won a free t-shirt, and email webmaster@investorsunderground.com to claim that prize. Okay, so for the next section, I am not a financial advisor, neither is Judah, and these are not buy or sell recommendations. This is for informational and educational purposes only. And we're going to get into our main watches for the week. So Judah, do you want to kick us off with your main watches?
Yeah, sure. So I'll be keeping an eye on these oil and gas names. Really, just these three out of the basket. INDO is just one that I'm most familiar with. I know it's one of the strongest ones. And TPET had a very impressive move out here when it broke out of this little range, as well as HUSA, which I think is or was the number two. But these three, I mean, showed some really good strength today as the market was pulling back. Some great volume, some great action going on, and great history here. So if we could continue to kind of, build and hold up, I mean, even these hourlies, they're looking decent. So any continuation on these, I'll be interested in. And ACB, part of the cannabis name that is holding up really well as well, is around the 660 mark is what I'm interested in. If we could break above that level around 660, 665, which was around the key level today, actually, then I'll be interested in some continuation over there. There's also the EJH, which just is an old liquidation kind of name that's kind of building here. Definitely one to be cautious about. I only have this in mind because I remember when ILAG back here, had that kind of setup. It's not the same. I'm not saying it's the same, but it had that breakout and it kind of hit my alert, and I passed on it and ended up having a wild move. And names like these, it doesn't really matter what kind of your market you're in. It could still have that wild move. But this is obviously something to be really cautious on because it could also liquidate faster than you could think. So sizing may be small. I may not even take it. This is just something that I'm keeping an eye on as it builds or breaks over that 315, 320 area. And then the final one I'm watching is this JAGX. Nothing I'm too excited about. It may be even a little forced, but if we could break back over that 17, 18 level, then maybe we'll get a little bit of a T+2 liquidity type of move. Not looking for much really, but I mean, I'm mostly keeping an eye on the oil and gas names for continuation because of how well they've been moving this past week and especially today with the market pullback. But that's pretty much all I got for today. I don't want to force too much. So really, I'm taking things day by day. A lot of things that, like I said earlier, like a lot of things just are in the moment. Like we're in the moment market where you may not have a plan yesterday or today, but something new will come up tomorrow and the day after. So I'm just taking it like step by step. And yeah, I'm really, like you said, taking a step back. And it could be taking a step back and like not trading at all, or taking a step back and sizing down. So this is all I'm watching for next week. Yeah, that's pretty much it for me.
Excellent. Yeah, and just during these transitional periods, if it's slower in the market for people, it's also a fantastic time to learn, to add a new strategy to your playbook. And something to keep in mind is that even if you learn a strategy and you get familiar with it during a period like this over the course of a couple of weeks or a month, is that you don't necessarily have to be trading it live this time around. And so, we're going to have many, many corrections in the market. And I think that there's a statistic that the S&P on average corrects by 10% every single year. And so, it's not like this is a one-off event. These are just periods and cycles in the market. But getting familiar with a new strategy or, more of a bear market strategy now, even though you might not get all the rewards while you're just learning it right now, the next time that cycle comes around, you'll be familiar and you'll be prepared. And so that's just something to keep in mind with any kind of market cycle or market changes. And I do that all the time, and it's something that has helped me a lot. So a couple of my main watches for the week are Mara. So this has been on watch for a long time, and I've traded it many times. But we've been talking about the Bitcoin halving for a while, and that's where the rewards that the miners get for mining Bitcoin or for verifying the blockchain transactions, that reward that they get gets cut in half. And so, we've had different narratives around that, like what it actually does to the price of Bitcoin. But like in theory, it's supposed to reduce the amount of supply that's coming onto the market, and it can be somewhat of a bullish event. But I think that that's just one variable in the crypto world, and it's not the main thing. But So a lot of these crypto mining companies have been really selling off into that event. It's kind of like buy the rumor, sell the news. In this case, it's sell the rumor, and it could be potentially buy the news. And so even though these companies had bad news with like the halving coming up and the rewards getting cut, once we actually get there, and that day's supposed to happen on April 20th or April 21st, so sometime over this weekend, once that is done, then what? You have to ask, is there stability coming back to these miners for the next 4 years, because there's not another halving for the next 4 years. And so you can have a very quick, kind of market pivot. But I think one thing to really consider is that the general market does impact crypto, and whether there's high liquidity or low liquidity, or whether there's a lot of speculation and greed, or if it's more tame. So, I always try to look at Bitcoin as like that kind of ship and see if it's going to drag any anchors with it, like the Bitcoin mining stocks. But I think that the miners in particular could potentially have some really good bounces coming up once you get that event, and then as we open up next week to see if they have some relative strength. And then in addition to Mara, I'm also watching a lot of the AI names. And so we had some, very big pullbacks across the sector with NVIDIA and AMD and ARM. And I think a lot of it was, the earnings, the recent earnings of ASML and TSM, those are basically showing that there's demand in pockets of the AI stuff, but it's just not for every single company. It's not in every single sector. So, you have that separation kind of process going down. And I think even though NVIDIA had a big sell-off, that's still definitely the leader, and they're still the best positioned. But, that's the narrative. That's the backdrop that, you have to pay attention to the chart as well. And you can't, get stuck into a thesis. So right now, my working thesis is that if the AI sector kind of, recovers, and we have some other earnings coming up like SMCI on April 30th, and that will provide some insight into some of the other names. But I think that NVIDIA is still the leader, and so if the market starts to turn around, that'll be the go-to for strength. But then some of the other names like ARM, these are names that were IPOs, and they only IPO'd with 10% of the float. So an investment bank, I think a SoftBank or someone, owns 90% of the float, and then they'll kind of feed that out to clients and other people. But if people start dumping their shares on the market, that's how you get these large kind of liquidation moves, because it had one big gap up on earnings and it kind of went sideways. And if you have all that supply come online, then you just get back to a more neutral baseline. And so names like ARM and AMD, those have really been hit hard. And if the sector keeps selling off, then those are the go-to names until they either bounce or reset or something changes. And then in addition to the AI names, I really am just watching things like Reddit, so RDDT. I had a trade on DJT this week, and it was mostly flat, but it was basically, or it was a slight gain, but it was based around that, perpetual selling, or that week or so of really heavy selling, and then waiting for that bounce. And so we had that with DJT, and I think that we could be coming up to something like that with RDDT. But I don't want to fight it, especially if it's still downtrending. So I think we're starting to see a turn, but it might take until the market starts to turn up a little bit to really get a good bounce on it. But that will be a name that I'm watching for the upcoming week for potentially a long. So, for my style, it's mostly options, relative strength, relative weakness, get a good read on the market, and then just try to find the path of least resistance. And then if some of the small caps are moving, like INDO or TPET or any of those things, then I'd be more than happy to join some of those trends on the long side if they hold up and if they present themselves. But that's what I have on watch for this week. And it's a changing market. It's a time to be cautious, not to be pedal to the metal. And just if it's slower in your trading, it can be an accelerated time for learning. And so I think the longer you are in the market, the more you kind of appreciate these cycles. And there's times to learn, there's times to earn, and just knowing which time you're in is really a good thing to put into practice.
Mm-hmm. Yeah, I agree with everything you're saying. I think it's very important to focus on the relative strength during times like this, and for me, kind of just avoiding that day one move. Like if news comes out on something, I'm going to add it to my future watch lists that I have. But I really want to stay away from it. I don't want to trade it. I don't want to scalp it. I want to focus on daily setups that are showing strength today. And that's pretty much where my focus is now and where I want it to be, coming into next week. And yeah, like you said, I mean, these AI semiconductor names, there is potential for that bounce. I think soon. I think at some point this week, it should offer a decent mean reversion move if that's your type of setup. So that's something else that I'll also be keeping on watch.
Absolutely. And like you're saying with the breaking news, and like I was saying earlier with earnings, a lot of times in choppy markets or in volatile or kind of bearish markets, what you will have is any positive news or any positive earnings, it'll get sold into because someone who's been in it and they want an exit, that's their chance. And so I think that that's a big adjustment for a lot of people of being like, well, for the last 6 months, every time there's been good news, this is gapped up or doing so, it's made a good run from that catalyst. If you have a market change, now that catalyst is an exit opportunity. And so it's not that the strategy doesn't work anymore. It's just not the right strategy for this market. So that's a great point that you made, Judah.
Yeah, definitely. The sell off on earnings, on good earnings, is a clear sign, of weakness coming into the market.
Absolutely. Yeah, so thank you for joining us. And again, leave some comments in the comment section. Ask us questions, ask us anything, and we will answer that. And congratulations to the t-shirt winners. So Judah, thank you for coming on this week. Great watches, and I hope that everyone has a great trading week.
Have a great trading week.